Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hiding in plain sight within corporate filings. Today we're diving into Richtech Robotics Incorporated's latest report to see if their robots are humming or if their operations are a bit rusty. Alright, so this report is what is called an 8K filing. Think of it as a way for companies to announce big news to the public right away, like something important just happened that investors need to know about. And for Richtech Robotics Incorporated, something important definitely happened. The key date here is the 10th of November. That is when the main events we're talking about took place. Basically, two major things happened that day, both approved by the company's board of directors and a significant chunk of their shareholders, around 68.50% of the voting power. First up, Richtech Robotics Incorporated filed to change its articles of incorporation. What does that mean in simple terms? They are increasing the number of Class B common stock shares the company is allowed to issue. Before this, they could issue up to 200 million shares. After this change, they can now issue a whopping 1 billion shares. That is a five-fold increase. Imagine a company saying, "We can make 200 cakes, but now we want to be able to make 1,000 cakes." It signals a potential for significant growth or a need for more shares to be available for various corporate actions. The second big item is an update to their 2023 stock option plan. This plan is essentially how the company gives out stock options as rewards or incentives to employees and executives. The update means that the number of shares reserved for these grants will now increase automatically each year until 2034. The amount of this annual increase is tied to a percentage of their outstanding Class B common stock, or a number determined by the board. This is a way to ensure they have enough currency in terms of stock options to keep their team motivated and attract new talent. This specific clause is interesting. It states that the automatic increase in shares for the stock option plan will be the lesser of 18% of their total outstanding Class B common stock as of the prior the 30th of September, or whatever smaller number the board decides. This gives them flexibility. They can give out a lot of shares if the company is doing really well and the stock price is high. But they can also cap it if they want to be more conservative. It is a bit like saying, "We'll give you a bonus based on how much we sold," but there is a ceiling on how big that bonus can get. Now, let's put these changes into perspective. Increasing the authorized shares from 200 million to 1 billion is a massive jump. This is often done to prepare for future fundraising, acquisitions, or to offer more stock options. From an investor's standpoint, while more shares can mean more growth potential, it can also lead to dilution if not managed carefully. Dilution basically means the ownership stake of existing shareholders gets smaller if the company issues a lot more shares without a proportional increase in value. The stock option plan update also points towards a strategy of using equity as a key part of their compensation. This is common in growth-oriented companies, especially in the tech and robotics sectors where attracting and retaining top talent is crucial. The automatic annual increase suggests a long-term commitment to this incentive strategy. While this report doesn't contain detailed financial tables for us to dissect immediate earnings or losses, it gives us a strong signal about Richtech Robotics Incorporated's future plans. They are clearly positioning themselves for expansion. The big increase in authorized shares points to potential future capital raises or strategic initiatives. The enhanced stock option plan indicates a focus on incentivizing their workforce. However, it is important to remember that an increase in authorized shares doesn't automatically translate to success. It is a foundational step. The real story will unfold in their future financial reports. Will they use these new shares wisely for growth that benefits all shareholders, or will it lead to significant dilution without commensurate value creation? That is the question to keep an eye on right now. Richtech Robotics Incorporated seems to be laying the groundwork for a more aggressive growth phase. They are ensuring they have the tools, both in terms of share capital and employee incentives, to pursue their ambitions. The increased authorization suggests they might be looking at significant future events that require a larger pool of shares, like a major acquisition or a substantial equity offering later down the line. Looking at this filing, my assessment is that Richtech Robotics Incorporated is in a proactive phase. They are building capacity for future actions and incentivizing their team to drive toward those goals. The risk here lies in execution. Will these strategic moves pay off, or will the increased share count lead to dilution without delivering the expected growth? The opportunity is clear. If they can effectively leverage this expanded capacity for strategic growth, it could lead to significant value for shareholders. The next financial reports will be critical in showing whether this preparation is leading to tangible results. Alright, that is our breakdown of Richtech Robotics Incorporated's latest filing. What is your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.